All right, so let's bring up our panel. And again, if you have any questions for this group, please go ahead and put them in the Q&A, and I will interject them into our conversation. Tom, Alan, Wendy, it is a delight to have you here today. How is everybody?
Great, thank you.
Very kind. Good morning.
Morning.
Good. All right, Tom, I'm going to start with you. You spoke last year with ComSec's chief economist. I think it was around July, and that's where your financial year comes to a close. And when I was listening to that, what really struck me was the optimism in your conversation. The two of you were super optimistic with what was ahead for the economy. Are you still as optimistic as you were almost a year ago?
Well, I suppose, Wendy, good morning to you in Phoenix, and good morning to the audience wherever you are. And I suppose, you know, it's really important to make some key decisions when you're navigating such a challenging environment like the pandemic that has influenced our lives over the course of the last 12 months. And whilst it can be very difficult from time to time, the choice of optimism is much better than the opposite. And so that, I think, is just a personal decision that you can make most days. And yet it can be incredibly challenging under a variety of conditions, because it might not just amount to your experience. It could be a matter of what your family is having to endure, your friends, a whole range of issues can feed into that. But if you approach things from an optimistic perspective, you know, without sounding trite, it just seems as though the gravity changes a little bit. But the optimism that you speak to in that conversation is justified with some reason, because the Australian experience has been one that we should reasonably be very grateful for. It comes down to a geographic thing as much as anything else, and Ireland is a lot easier to manage when it comes to something like a health issue like the COVID-19 pandemic. There were some moments that were difficult, and Alan will be able to speak to those more precisely, given that he's in Melbourne. But once we got through those situations, we saw an extraordinary response on the part of governments and central banks in terms of doing everything they could possibly do to make the burden on the economy less than what it could have been. But it was also the contribution made from other important linkages in the economy, such as the financial institutions, you know, creating mortgage holidays and suspending repayments on debt and things of that nature were incredibly important. All of these things worked in concert to be able to create the foundation for what is an enviable recovery. And even in the last day, we've seen some economic figures that paint a historic 6-month period in terms of the recovery for the economy. So if you're a provider of services, to be able to operate with that sort of backdrop, it's a real blessing.
You bring up a few very important things there. Certainly that Australia did have some unique benefits to overcoming some of the big hurdles of the pandemic. But what you also mentioned is that the financial services organizations took some responsibility for what they could impact and change and make better. Do you think that the financial organizations have been agile enough, or are there things that they could have done to even reduce the impact further?
Well, I suppose within that question there are two. The broader institutional response, where there was an overriding philosophy of trying to help people. I think that was very strong, and there was evidence of great leadership on that front, which wasn't goaded by regulators or anything of that nature. It came from within, and I suppose it was an opportunity to do the right thing when you consider that as a whole, the industry has had some challenging times, and that was made obvious through the inquiry that was recently held. So in that respect, the financial institutions were really able to expedite many initiatives. There's always more that you can do, but I think under the circumstances that we saw in the last 12 months, a lot was done to be able to put the average person at some ease, and give them a sense that big institutions had their back. Agility is always can always be the golden fleece within large organizations. It's just necessarily when you're having to wrangle so many people and get them all facing in the one direction, let alone pursuing particular strategic goals. That's always a challenge. But I think under the circumstances, speaking from our experience, it was executed in an enviable way, and it gave great confidence to the business as a whole, because the leadership was encouraged that the rank and file could move quickly and decisively, and it was a source of immense pride for the rank and file to have been able to make such a big difference to their customers as well, because one thing that stands out in terms of the people that I'm surrounded with on a daily basis is their extraordinary motivation to help their customers on a daily basis.
Thank you for that. And Wendy, I want to ask you the same question, but I would love to hear your perspective from the CX perspective. Do you think that financial institutions have been agile enough in customer experience this past year?
Yeah, good morning, everyone. It's great to be here, and thanks for having me. So look, I think, as Tom said, in the past 12 months, we've dramatically changed the way that we live, the way that we collaborate, and the way that we connect. And I think in terms of CX and customer experience, the global pandemic has really made customers step back and sort of re-examine their priorities and what's important. And so I think because of that, they've been very, very focused on how they want to interact with brands and with companies that they do business with. And we've also seen customers adopt new behaviors in terms of how they do that. So how they connect with those brands and how they connect with those companies. We've seen a shift towards a much more conversational world. Mm-hmm. So, customers want to connect with companies in the same way that they would connect with their family and friends. So they want it to be conversational. They want to connect through social media, through a lot of those platforms that they're connecting with their family and friends. So I think organizations really need to think about that, and they need to think about that in the context of their CX strategy. Some of the other things that we've seen in terms of that shift in customer behavior is also that customers, they want to self-serve. So they're really using things like AI and chatbots and knowledge centers to really enable them to find the answer to their query or their question as quickly as they can. So efficiency is really key for customers. And so again, organizations and companies need to think about how they build that into their CX experience as well.
So what I hear is consumer behavior is certainly changing, and it's changing pretty rapidly. And organizations do certainly need to adapt to that. But that agility we might not be seeing that equally across the board, because not every organization was set up to be that agile, and certainly wasn't set up. And I would argue that the financial services industry is oftentimes not as agile as other organizations because potentially of some legacy technology. And so, Alan, I want to reach out to you with this. What's the balance between being really nimble in this space and being an established player that has this safety of I've been doing this for 50 years. I've been doing this for 75 years. Like, you trust me. So just hang in there with me.
Look, I think actually organisations in finance have been quite agile. I'll only talk about my own organisation. One of the things that we have done that is, I look back and I think, I can't believe this actually happened. So every Wednesday, I basically put together a report that goes to the CEO that looks at every electronic transaction that occurred up to the previous weekend. And so we can actually, for us, it's about 5 million transactions a day, about 2 million customers a day. So what we're trying to do is actually give real live information about what's going. And so that makes the bank a lot more receptive to what's happening. So Tom, you were talking before about this time last year, you were optimistic. This time last year, we were really scared. And what happens is that you can trace the daily stuff. So you can see, I mean, many years ago, I used to run the forecasting and modelling area of the Australian Treasury. It took us 3 to 6 months to realise we had a recession. We could see this recession happening within about a week. The other thing that we do, that I'm not sure is well known, is we give that data to the Bureau of Statistics. We give it to the government. And so tomorrow I'll be talking to the Treasurer about some of the data that we saw essentially as they moved Melbourne out of lockdown again. So we sort of had about 4 or 5 cases and nobody in the States or Europe believes us, but we shut ourselves down for a week. And in Melbourne, we had a period of about 3 months where we shut ourselves down because we got about a couple of hundred people that had the virus. So I think the degree of flexibility has really changed in terms of being real live in terms of the data, what is happening. Tom mentioned that banks were very good. I think they actually really acted as shock absorbers. We've seen some big change in behaviour. Some of it was forced, but some of it will keep going. So for example, we talk about retail sales in Australia up about 10% over the last year, including the pandemic, and we think, wow. But then we do an index based, again, on that sort of data on online retail. It is up 45%. And it's sort of, you can see where they're spending it. Now, a lot of it was, if you close everything down, nobody goes into the shops. And so the CBDs essentially die. But everyone says, oh, but I still need my stuff. And so what they do is they try this online stuff. And so it went from 9% or thereabouts of total retail sales 18 months ago to 12.5%. And I think that's going to continue. I mean, the other big issue that banks are dealing with is what I might call tails, areas that, so we have a big project. The government had this thing called JobKeeper, which is essentially they pay for you not to fire people. And it's coming to an end. We can see, and we show the government, which sectors are basically doing well and don't need the JobKeeper. But there are tails where essentially things like accommodation, food, education, that sort of anything relies on either CBD or foreign students is terrible. So they tailor their policy response to that. And we know, for example, in the CBD, particularly Melbourne, has been closed down a lot. The level of activity in terms of accommodation is about half what it was 12 months ago. So you still get these big impacts, but if the bank knows about that, they can sort of respond to that. And so one of our main offices, for example, is in, well, 2 in the CBD, so 3, of which only 1 is open.
Okay.
So if you're, and what we see broader effects is that if large chunks of the population are living from home, that's where they're spending. That's where they're going to be buying their houses. So you see in Australia in the bush or, 100K away from the capital city, as long as they've got an internet, they're actually happy to live there, and that's where their house prices go up. So if you know that sort of information, you can then use that to try and tailor it better for the new changes customers are seeing.
I want to get back to that data piece in a bit because there's a lot to unpack there with what to do with all that data. But Tom, I want to ask you, with all the changes that Alan just outlined, shops opening, shops closing, CBDs being shut down, us going into lockdown, more online shopping, what is that doing to consumer confidence? And are we feeling better about things in the economy, or is this halting us a bit with all these ups and downs?
Well, that's a really good question, Sarah. And I'll just have to correct myself because I misheard your question, and the conversation that I thought you were referring to wasn't at the beginning, or it wasn't a year ago. It was closer towards the end of last year. So I apologize if I misconstrued that. Along with Alan, at this time last year, I think everyone was looking to the future with a lot of trepidation. So it was only towards the latter end of last year, particularly in December, we resolved the US political equation. It seemed people were talking more about a brighter future in the United States, and the markets responded to that in kind. But back to your question about the way that households have responded over the course of the pandemic. The one thing that many would have said 12 months ago, gun to their head, how is the consumer going to behave? Will they be spending more or less? To see the way that things have panned out in this country, it is quite surprising. So again, it comes back to the institutional response to a large extent when you have the central banks and the governments working together so constructively, particularly with the initiatives in relation to helping people stay attached to their jobs. That gives people a very strong foundation to look into the future from, compared to what it might be. And we at the same time have seen asset markets move higher. Home values have performed relatively well under the circumstances. You've seen the share market improve. These are all reactions to zero interest rates and big stimulus programs. When the stuff that people own is doing better, they've been able to peer into the future with a little more confidence, then that is an incredibly important foundation from which to recover in economic terms. And I suppose in the Australian experience, again, I come back to those numbers that we've seen yesterday. That's a real validation of the Australian economic experience, at least in the last 12 months, but also in terms of how the health crisis has been managed. As we've had our hiccups, Victoria, unfortunately, has been at the sharper end of that. But considering where we could have been, looking to Europe, the United States, or the UK indeed, we could have been in a vastly different set of circumstances that would have taken much longer for us to recover.
Sarah, I might just come in there and say one of the things that's important to understand as well is when the government gave the money out, again, using our data, what we could see is a lot of people actually got more money as a result of government handouts than they were getting previously in their job. The other thing we then saw that happened was people, as they got locked down, decided they were going to be working from home. And so what they did is they went out and they bought a new desk, they bought a new computer, they did renovations internally. And so you could see where the spend was. And so, we were worried that unemployment, which at the beginning of the pandemic was around 5%, would go to 12. It's now 6.4 and looks like it's going down really, really quickly. We run a big business survey, for example, that just fell off the cliff in terms of confidence and conditions and outcomes. And in about April, May, the last one, we'll put another one out next week, but in January, all our core measures like confidence, outcomes, forward orders were above long run average. So it's really an amazing story, but it was one on the back of money that was given from the government, made the consumers feel happy, tried to get the employers not to sack everybody, And the result was we just probably had one of the best performances in the world. I mean, the GDP numbers that Tom was talking about, we're only 1% below where we were at the start. And we know that on our own data that January, February were really strong. So I suspect we'll be back to the same level of GDP where we were before this all started by the March quarter. And I can remember early on, we thought it was going to be not back until the end of 22, and then we've sort of brought it back and back and back, and we're sort of saying we're already there. So confidence is really important, but the income impacts are really important.
That's a very important distinction, and it's very exciting to hear that the optimism, but also the reality around what you're talking about, and the fact that you do feel that Australia in particular is headed in that right direction and will likely come back stronger than ever. There are some things though that we know have changed and maybe will have changed forever, and that is work from home. I see Wendy and Alan are still at home. Tom, I see you're in an office, but it looks pretty empty behind you. So chances are it's likely it's not at full capacity. So Wendy, how has this impacted how we as employees are behaving and what our expectations are going forward?
Yeah, I think we've all been part of the biggest work from home, excuse me, experiment over the last 12 months. I only joined Zendesk about 9 months ago, and I onboarded and joined the company completely virtually. So right here at home. And that, to be honest, I was anxious about that, having to join a company, having to establish relationships.
You should be anxious about that. And chances are you now have some really great pieces of advice that we could probably do an entire webinar on how do you properly onboard during COVID.
Yeah, but look, while it was a different experience, it was equally a great experience. I mean, if I think about it from a CX perspective, all of a sudden, all of these customer support centers, everyone was distributed. Everyone was at home. All of the agents were at home. And so I think what is really important in that context is for organizations to really ensure that their customer support agents have the right tools. Because we all know, when our employees are happy, then the customers are happy. And so really, as I say, making sure that they have the right tools and technology to enable them to continue to do their job and do their job very well from home is key. But equally, I mean, organizations, really need to have a lot of empathy. They need to appreciate now that people are at home. They're juggling many, many things at home, kids, pets, homeschooling. I mean, a lot of us went through a period where, we were not just doing our jobs, but we were trying to be teachers to our kids as well. So, tools and technology, but equally organizations, need to have that empathy. They need to now give their staff flexibility. And I think, that's one of the great things that has come out of all of this, that flexibility. Now I'm working at home, I have dinner with my kids every single night. Right. I never did that when I was in the office. I never did that. I was never home in time to do that. So there's some really, really great things that I hope that we continue to take forward into the future as a result of this.
You brought up technology, and that's a question that's actually coming in from Alistair. And the question is, are there gaps in the capability or services that non-office remote employees are now feeling? Alan, any advice or any insight you want to give there? Like, did your technology partners react accordingly, or did you see some gaps when everyone went home?
So let me I'll probably get into trouble from NAB for saying this. I think NAB technology is normally garbage. Big organizations don't have great systems. However, they put on some new technology about a week before I left. And I'm sitting basically, I can see on my technology a live dealing room screen. So effectively, it makes no difference whether I'm at work or whether I'm not at work. And at one stage, NAB had about 34,000, well, we've got about 34,000 employees, of which 30,000 were working from home. And they had the technology to do that. Now, some people had to actually still go into the office, but most of us didn't. So I was really surprised by what technology could do and has been doing. I still worry that when my laptop finally dies, I'll probably have to go in to get someone to fix it up, because their sort of idea is, well, I'll put a new one in the post, which sort of doesn't work. But I think technology has really changed a lot. And so I think you can do a lot. There's some things you can't do. I mean, you can't, well, maybe you do a Zoom meeting when you're talking to your private banker and all that sort of stuff. But I've been surprised by that. You were talking before also about changes. We do what's called a survey of commercial property, and we asked a special question. This was in December, and said, when this is all finished, what proportion of the population working in the CBD will be there at the end? Okay, and nobody, about 400 respondents, experts in property, nobody said more than 80% would be returned. And so if that's the case, you've got some issues. If you're a small retailer in the CBD, you've also got some issues associated with you own large properties where the value is probably, or the demand is not there anymore. So you've already got an instant oversupply.
And that is
we'll
such
just have to see what happens, I suppose.
That is such an excellent point, because we're seeing that worldwide, right? Where certain parts of our cities are now very empty, and we're anticipating a pretty dramatic issue with commercial real estate. Tom, what's our long-term impact with the fact that people are now working from home? How is that going to change our economic situation?
Well, it's already changed it as far as the experience that Alan described in terms of the fillip that regional centres have experienced in terms of property prices. That diaspora of people moving out of cities and being close enough to them to not feel isolated, but then having that effective communications link is far more achievable today than it has been even several years ago. But I suppose the thing is that when we consider working from home, it's not all rainbows and unicorns, as we've heard in terms of home is home, and to try and carve out that space where it's work as well is it can be quite challenging. And I recently spoke to the head of Transurban, who operates toll roads in Australia and in the US, and they commissioned a survey of people to get a sense of what their expectations are in the medium term. And there was a significant proportion of them that expect that they will be returning to the office as far as a more normal picture is concerned over the course of the medium to longer term. So it might not necessarily be a coherent picture of them being in the office to the extent that they were prior to the pandemic, but it's not necessarily going to be one where people are just going to be exclusively from home from now on. It's going to be some sort of a mix of those two outcomes. So I think the thing is that ultimately people will be served in a way to be able to have the flexibility that they need, and the employer will be satisfied that they will have the productivity that they'll need, and that seemingly happy fusion will make for a better work-life balance. That's probably something that was more elusive before the pandemic.
So it does sound like some of this acceleration, some of this technology acceleration, the work from home acceleration, those are pretty good things for us. and that our long-term effects with this look to be pretty positive. You did talk about flexibility and this need for organizations to change up a bit of how they view employee relations, how they view customer relations. And Alan, I was listening to a recent NAB webinar, and there was a lot of conversation about the best way for customers to reach the bank. And there was a lot of conversation around the right channel, the right time. And I was really curious, has the bank always been that transparent about things like channels to their customers?
I think when you're in a crisis, you look at more channels. Obviously, and it's accelerated, but there's always a trend away from cash. There was a trend to just talking, come and see your banker, etc. But people were saying, well, you can do all these things electronically now. And so if you don't improve the relationship, use the sort of channel that the customer wants to use, then you're going to lose the business. And so I think we're much more trying to understand customers. Tom was right. There was a lot. The banks, as I said, really were shock absorbers. We just said, okay, guys, if you've got financial problems, just go interest. Basically don't pay any interest for the next 6 months. And we'll see you on the other side. And that's not a behavior. I mean, if you go back to the 1990 recessions, a lot of it was basically banks saying, oops, you're in trouble, I'm closing you down. And so this is very different from the 1990s. And I think it's much more trying to help. And that's what banks and financial sector should be doing. You do see big differences. And the other thing that I've seen is a really, really big difference is normally the growth in credit roughly approximates as the growth in deposits. They talk about closed systems and all that sort of thing. We've currently got a system in Australia where everybody's putting their money temporarily in the bank because they're scared. They're moving out a little bit now, but the growth in credit is about 2% over the 12 months. The growth in deposits is 12. So the banks are no longer going offshore to get extra funding. And so you do all sorts of different sort of ramifications as you go through. But I think, yeah, the banks are very much aware that people prefer, if they have to use electronics, and we're going to make it easy. And if you don't make it easy, you lose the customer.
And Wendy, we've certainly talked a lot about this. And Forrester recently put out a report that said a 1-point improvement in customer experience. If banks were to see that 1-point improvement, they would see a revenue increase of 9.6 million for every million customers. Now, that's way too much public math for me to try to do at this moment in time, but I do know that CX matters. So that concept is certainly not lost on me. So I want to dive into that for just a moment. And you've already mentioned some of those shifts, Wendy, like around messaging, those additional channels. But what else are you seeing, particularly in the financial services market, that is really that banks need to do in order to adopt what their customers are asking for?
Yeah, and maybe just to build a little bit on what Alan said. So obviously, customers want to have that multi-channel interaction. They potentially want to be able to switch between channels as well. So whether that's email, whether that's messaging, the social messaging, whether that's the phone, they want to be able to have asynchronous conversations across those channels. They also want the bank to remember who they are, and they want the bank to personalize the engagement as well that they have. So I think that's incredibly important. I think we're seeing 1 in 2 customers wanting that personalized financial advice that is very much aligned to their circumstances. So they don't want to repeat themselves when they contact the bank. And so I think from a CX point of view, or the banks really need to enable their customer support agents then to be able to personalize that engagement with their customers. And in order to do that, the agent then sometimes has to, reach out to several departments for information, to pull that single view of the customer together to enable that personalization. So I think, again, banks need to think about that and how they enable that in their CX strategy. Often there'll be legacy systems involved. And so their CX software really needs to be able to integrate with those other legacy systems so that they really can bring that single view of the customer together and personalize the experience.
That personalization, Alan, let's go back to the data. Are you using your data to do exactly or somewhat what Wendy just described?
Yeah, we're trying to understand what's going on. We're trying to, it's a bit frightening in terms of confidentiality. So we will never sell any of our data. We will use it internally to see if some of our customers are under serious problems. So we can see their cash in, we can see their cash out, and we can see where they're spending it, etc. And on the revenue side, we can see how much they're depending on JobKeeper, etc. So we're tending to try and use that data to get a better understanding of where the customer is at. Okay, typically being a bank, they say, right, well, we want to know where you're going to fall over or not. But they're now saying to me, well, where should we lend more to? Which I think is I've been in this job for 20 odd years, nearly 30 actually, but I've never been asked before, where should we be lending rather than where shouldn't we be lending? So that's a sort of a difference. But yeah, the whole idea of the data is one, real live, as up to date as you can, help the government. There's no point in us knowing what's happening and not telling the government, and to better tailor our services to people that we think need to be helped.
In our last few minutes, I want to make sure we get to some of these audience questions. I told you this was going to go fast. Wendy, any trends showing a reduction of staff taking sick leave or personal leave since we've been working from home?
Maybe just what we've experienced at Zendesk. Maybe I can share a little bit of that. And I think it goes back to just that flexibility that we're offering people, and, organizations, being very conscious of that. And so some of the things that we've done here at Zendesk, we've given all of our staff carers leave. So we've given them an allocation of days that they can use just to help them, juggle everything and cope with the working from home. We've implemented things like Flexible Friday, where we've asked everyone just to get off Zoom. Zoom fatigue is a real thing. And so we've really encouraged everyone across the organization, on a Friday afternoon, just to shut down Zoom and get off Zoom. So I think the more organizations weave those things into their people strategy, the more they'll ultimately support their employees and really have that empathy, given the situation we're all in now.
It does come back to flexibility, agility, and certainly having empathy for all parties concerned, since we are all going through this together. Tom, there's a question here from Chad, and he is curious, do you see a further regionalization of the workforce to less centralized places out of the CBD and into regional or suburban hubs? And what is the impact there if that happens?
Well, that's actually that's got many parts to it, the answer, but I suppose just at a very high level, one thing that characterizes the property market in Australia is that it tends to be dominated by two big regional centres in terms of Sydney and Melbourne. And for young people, it is incredibly difficult to get a foothold in those property markets. And indeed, the ramifications socially are also significant as well, because it means that essential service workers, ambulance drivers, nurses, people of that job stripe it is becoming increasingly difficult for them to find accommodation in these places. So when that decentralization piece then means that people can see the ability to forge their lives in another part of the country because of what technology can allow them to do. So that's great, you know, going off to a regional centre, buying a more affordable house, but then it's important to understand that the financial ecosystems of these regional places are often founded on more reasonably priced properties. So when those property values in these places start to move higher, that actually disrupts the fabric of things in that regional scheme. So, you know, people who may have been able to find an equilibrium between a modest a job that pays a modest wage and their cost structure being quite modest, that sort of gets bent out of shape a little bit. So there are a lot of things that are easy to underestimate in this picture, but you would think that it is a trend that might have more legs as far as the longer term is concerned. And as the technology improves, then, you know, young people are just going to find the allure of big cities like Sydney and Melbourne, to a lesser degree, Brisbane and Adelaide. Perhaps that siren's call won't be quite as strong.
But as we know, those trends do have a tendency to go like this. And it wasn't that long ago that our cities were not where people were living, right? That everyone did want to live out in the suburbs and they had come in. So it will be a fascinating time for us to watch how that begins.
A lot of another aspect of the answer to that question is, you know, how governments, you know, form their policies around that diaspora being less disruptive as well. So, but it's inevitable that the benefits, people are seeing the benefits of not traveling, you know, 4 hours a day. The time that can be spent more effectively with their family or from a work perspective, those elements have all become very real for people over the course of the last 12 months.
Thank you for that. And Alan, I want, this is a question that is near and dear to my heart, but do you think that we need to redefine the way that we measure CX? That there is a new criteria or definition for customer experience?
I think increasingly we need to make customers satisfied with the service that we provide. So one of the big things that NAB does, and I'm sure most of the other banks, they look at Net Promoter Score. They get you to give a score out of 10, and they think you're a promoter if you're 8 and above. And so a lot of the focus is moving to try and say, right, I will reward the executives if you can get a Net Promoter Score of X. And that's new as far as I'm concerned. So I think there will be, they're trying to be as open to their customers as they possibly can. I mean, our CEO says at times it's actually in the best interest of the customer for the bank to say no, but you need to explain why and what you should be doing. So I think the short answer is, yeah, banks are going to increasingly continue or improve, hopefully, their interaction with their customers, because that's what we are. I mean, you know, it's just, we're a whole run of customers and we use them, we try and help them, it helps the economy. And I think it's really important that we keep that open, because if we don't, we're going to lose them. And there's a lot of competitors out there and new people trying to get into the system. So I think it's on to the executive to make sure that happens.
I think that is very true for all industries. Wendy, anything you want to add to that?
No, I think, yeah, I think CX, you know, is now a competitive advantage for organizations. And I think organizations have had an opportunity in COVID to step back and realize that. And so I think, you know, what we're seeing is, you know, more and more organizations making that investment, because it is and it will be a competitive advantage.
Well, that is all the time we have. And I want to thank the three of you for your very optimistic view on what we have ahead of us. I certainly appreciate it, and I know that the audience does too. And thank you for being experts in your field and helping us navigate this very unique time and space. I do want to point out that Zendesk recently launched a new report called Seamless CX in Financial Services. We invite you to please take a read, and please stay safe, be helpful, and we will chat again very soon. So thank you again, and bye everyone.